Good morning, everybody. It's September 26th. It's around noon Central Time. I wanted to make a video kind of explaining resistance, supports, 1, 2, 3 trends, either downtrend or uptrend. I also wanted to put some links down below because I found this new app called Yoda. It's kind of like the lottery for savings accounts. So I'll get back with you in 1 second and I'll explain some more. Alright, I'm back. So this Yoda here is kind of like the lottery. It's a high interest savings account, and here's a link with Yoda.com, but I feel like I couldn't find anything with the laptop, so you have to do it on your phone. You link a bank account, and then every $25 you deposit, it gives you a free lottery ticket. Free lottery ticket for up to $10 million. You have to match 8 numbers, I believe, or 7 numbers, but it kind of gives you the rundown on what it is. So you can look over this this page here, and then you can download the app on your phone using my link, and then we both get free tickets. I'm not exactly sure how many free tickets I get. Maybe 100 free tickets for me, 100 free tickets for you. Then it's a one-time deal for that. But every $25 you get, it goes towards this raffle once a week. And you get entered every week because of that one-time $25 deposit. Plus, it's an average interest rate of 2.3, 2.5%, which is still way better than probably what you're getting in your savings account anyway. That's just something I looked into. I'll leave a link down below because I've seen it on Graham Stevens, his YouTube channel. He always breaks down all the little small print, and he lets you know he's pretty honest about whether it's a good idea or not. And he even became a angel partner, he was saying. I'll give you the link to the video I seen yesterday about signing up. Well, I signed up, and it takes a few days for the money to clear. And then I think on Sundays they do their drawings, and then it repeats itself. So on Monday they'll pick a number, Tuesday they'll pick a number, Wednesday, Thursday, Friday, Saturday, Sunday. So that's 7. You got to get all 7 numbers right. And then on Sunday they pick the Powerball, like the bonus, and then it all repeats itself back Monday through Sunday. And your number, you get to pick your 7 numbers, or you get to let them randomly pick numbers. So, I just wanted to put everybody on that. I'll leave a link down below, and then I'll also explain some other things. So I'll be right back. Alright, I'm back. So another link I do is Acorns, where you round up your spare change from your credit cards or your debit cards. You can add your children. You can add a investment for your future. You can add a later for your what are they called? IRAs. And then you can do early investors, which is for your kids. I do the invest, $20 a month, later $50 a month, and then $5 a week for each child. And I invest into the stock market. And you can pick whether you want it to be aggressive investing, passive aggressive investing. Excuse me. And then you can look at your gains or your losses on the charts. And then there's potential hypothetical projections at 21. It says you can go to hypothetical projections at 65 years old. At the rate I'm at right now, when I'm 65, I should have 100,000 here, 100,000 here, and then when they turn 18, 19 years old, they should have, anywhere from 10 to 12,000 a piece. So that's more than enough to get a vehicle for them. I don't know, get them out of the house, get them an apartment or something. I'm just rounding up my change, and putting a reoccurring investment into Acorns, where I just set the money in there and forget it. Now, if you use my link down below, you'll get a free $5, and I'll get a free $5. And then you can turn your friends on, and you can use your own link and get your own 5, and they can get their own 5. And then they'll run deals where if you sign 3 people up in a month, you'll get an extra $150. So that's just another route to start long-term investing. And then I'll be back. All right, I'm back. I'm kind of putting this information out there. You can see that it kind of does a stair step on the way up, and it tells you that I've made $38,000 in 3 months in the past 90 days. It isn't bad. Wasn't as good as I was hoping, but the first month was kind of rough, and the second month wasn't too bad. Anyway, doing this on my own. I'm going to also put that link down below because this is the app that I use on my phone to actually do the trading. If you sign up and use my link, I think I get a free stock and you get a free stock. And then from then on, you can sign your own people up and you get your own free stock and they get their own free stock. I don't have very many followers on YouTube, so I'm not looking to get rich. I can see some of these big-time YouTubers that do financial advice that have thousands of followers. I bet they make a killing off of people signing up and using their link and them giving quality advice, which I'm trying to do. I mean, I wouldn't mind having a free stock or something, but I want people to sign up and try to do the same thing that I'm doing with the same information that I'm getting, because it seems like it's working out for me, and I'm not using a lot of time working and making a living. And I feel like if I can at least alleviate some of that stress of going to 9 to 5, it would help with everybody's well-being. I'm just trying to help out. I'm trying to give everybody the best avenue possible and use the least amount of time doing it. There's nothing more valuable than time. Time with your kids, time with relaxing, time with vacation, time to chase dreams, whatever you want to say. There's nothing more valuable than time, and if I can, free up a lot of your time and supplement your income, that's all I would want to do for everybody. All right, so if you use the link down below, I'll get a free stock. You get a free stock. Now that I've got those out of the way, I'll go over some of the technical analysis of these charts. I'll be back. All right, I'm back. So I'm recording my screen, and when I first show up, again, I'm using TDAmeritrade Think or Swim platform. So you would download this software to your computer, and then you would register, and then you can actually change this from an actual live cash account, or you can go to paper trading, which is a delayed by 20 minutes account that you can use funny money to practice the up and downs, which I suggest, because you throw $1,000 in there and then lose it, and then you don't have any money. But if you have their money to play with, then you can practice these supports and resistance lines. So what I normally work off of is I look at the bigger charts. What's the 1 month? So there's a month. September's been a bad month for Amazon. Doesn't matter if it's a bad month for Amazon, you can still make money on the way down, just like you can make money on the way up. Okay? Then you can come down to the weekly chart. So every candlestick is a week, right? So you get this uptrend in a week, and now you got a reversal. You don't quite have a 1, 2, 3 trend for the week, but then we come to the day. You got this up, and then you got this down. 1, 2, 3, 4, 5, 6, 6.5. Now you're not quite made it all the way down there, so now you got this 1, 2, 3, and you have to make it above that right there for it to be technically a 3. You need higher highs. Okay, then we break it down 4 hour. Then I watch the 1 hour. So I normally watch the daily, which is 1 day candlesticks, the hourly, which is 1 hour candlesticks, and then the 15, and those are normally the ones I go off of. I used to go 1 minute, 5 minute, 15s, but that takes a little more stress to prevail that way. These they allow you to take a breath. If you go hourly and 15-minute charts, half-hour charts, they give you a little bit of a breath. I mean, it's not going to save you if you got to watch this all day and you're betting the opposite way. Then you just plumb out of luck. But it may allow you to average your cost here and here instead of averaging it like, here, 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 here. You know what I mean? It slows down your trading, which can help you if something's going to go against you. It also help you if you're averaging in and it just keeps on building up. And you're like, oh, I don't know if it's going to change. I don't know if it's going to change. It allows you to breathe. All right. So when you're looking at, first of all, when you're looking at support and resistance, you're looking at where it peaks and where it valleys. Peaks, valleys, peaks, valleys, valleys, peaks, valleys, peaks, valleys, right? Highs and lows, highs and lows. So when you get down here and you look at these blue candles or bars down here, the higher the bar, the more volume you have. So when you have a high bar and then you have a peak or a valley, that's just line of resistance or support. So right here, this one, I'll zoom in a little bit. This right here is a big bar. So that means you have a lot of resistance right here. So you can put that down. And then you look at, if you look at across, it hits it there, it sits on it there, it sits on it there. So you know that's a valid point of either support or resistance. When I'm looking at it here, it's resistance. Okay? So when it comes down here, it'll be support. You can look for that line throughout the rest of your life, I guess, as long as Amazon's in this area. They could be $500 way up here or $500 way down here, then that has nothing to do with your trading day, right? All right, so we zoom back out. We look at another high bar right here. I'll try to zoom in on it. It'd be this one. So this was actually a valley. So you can either put your support line right here, or I like to put them on the close. I like to put them on the bodies of the candles because this is like a false breakout and then it comes back up. So it's really up to you on what you want to do. If I change this up a little bit, turn it white, and make it solid, then I can bring this up to somewhere around there. Oop. Yeah, move. And put it up there like that, right? And it's closer to the body. Now when I zoom out, and I look at that blue line I just made, it's supported there, it's supported roughly there, in there, it resisted there. See, so that's a valid point of support, right? Support, broke through, come up, it gapped over, support, down, support, broke through, resistance, right? So when it's above that line and it bounces off, it's support. When it goes through and bounces and comes up, bounces down, it's technically resistance. It goes from being the floor of your house to being the ceiling of your house. The candles are your house. Make sense? All right, so that's pretty cut and dry. That's how you make support and resistance line. Just look for big bars and whether it's a valley or a peak. All right, so the next thing we're going to do is the 1, 2, 3 trend. When you're moving down, you've got 1 down, 2, 3. So high, low, lower high, lower low. Once you get that pattern, now you're in a downtrend. So high, low, lower high, lower low, lower high, consolidation. Once you're out of consolidation, which would be right here, breaking out, high, low, high, low, high, low. Just continues itself. Now you got consolidation again, but you don't have a new high, you don't have a new low. Just kind of back and forth, back and forth, back and forth. And then you break out. Now you're at 1, 2, 3. Right? So you got high, low, higher, low. Shit. Just 1, 2, 3. Boom. 1, 2, 3. Back into consolidation again. 1, 2, 3. Back into consolidation. That's it. You can do trend lines like this. This is the big line. So when you want to do that, you do the bottom of the candle, and then you just connect bottoms, and they just stay on that line. Now it's the same thing as support and resistance. Once it goes up and breaks back down through there, now it's resistance. It was supporting it, right? Support, 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 breakthrough, resistance. Now you're back down in this choppy stuff. So once it comes back up here, it's going to want to bounce back and go up. And it's probably not going to just blow right back up through. It'll try to test the waters first. Test, 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 test. Boom. Made it through. That's where I bought the gist of my trading. I'll go to the 15 and you can kind of see where I trade. So when we come down, right, we're in this consolidation. When it breaks out of that consolidation, it'll come down. Comes out of there, consolidation goes down. Right, so you're just really trying to buy when it makes new lows. So we got 1, 2, nope, didn't make 3 because we didn't get higher than the first one. 1, 2, 2, 2. There's 3. So now you got 1, 2, 3, and then a reversal. So now you got 1, 2, 3. So what I would be doing is, now that I have a reversal candle, I want confirmation. So I get 1, 2. Now this candle closed here, so now I'm getting a 2. I'm waiting on this one to come through, and once it gets below there or closes below there, then you take your bet. Alright, so if I've seen all of this going up on 15, and I got this 1, 2, started to make 3, I'd wait for it to close above that. Right there, that above that close, and it never did, so I would never have gotten that trade. If I'd have went on the upside, it would have came down. It would have consolidated, dropped. I'd have been losing money. Then, if I'd have held through all that stress, it would have been 15, there's an hour. It would have been 2 hours later, I would have made some money. And then, after it broke up, then you'd be in that spot where, do I want to add more to my position on the up, or do I just sell it there, or I wait even longer? Well, we had this consolidation box where everything's just back and forth, so we draw a box around it and wait for it to break out like that. So I probably wouldn't have put it made a trade, which I didn't, and then I got this reversal candle, and I got 1, 2, and then 3. Then it broke down, right? It started to break down, so on a lower time frame inside of this box, it had been looking better for me, right? So I would have got 1, 2, 3. That would have made a better trade. And then confirmation, you're back up to about where you started, and then coming back down. You should have been sold out, right? And you got more consolidation here on a lower time frame, more consolidation there, and then a reverse. And then 1, 2, nothing. 3. 1, 2, 3. And it's after hours, so you're done trading anyways. And then out of the gate, you got 1, 2, 3. You could have confirmed right here on a lower time frame on the 1, made a couple of bucks, got out, and then you could have went 1 consolidation, 1, 2, 3. And we're really just scalping inside of this box. But if you were to long term, if you would have came in here and got this 1, 2, 3, and bought a call on the at the open, you'd been holding it all day long, and then after hours, then the next day, you still been holding it, and then once it broke out here and made a new high, you could add to your position and followed it up. That would have been more of a swing trade, but we scalped. That's really all I'm looking for is those 1, 2, 3s, get into momentum, get out. 1, 2, 3s, get into momentum, get out. right? And if you can find that right off the bat in the beginning of the day, and then you get all that, then you made a bunch of money. Uh, this is the MACD. When it's the blue line crosses over the gold line is the upside, price is going up, and then it goes back and forth, price is going up, and then it crosses down, price is going down. This is a lagging indicator, so it works with everything off of price and price action. So it's just, a second behind this. It's just confirmation of what you're seeing up here. RSI, when it's overbought, when too many people are buying it, this returns in this red, and then it tends to fall down. And this is back and forth too. Now it's too many people are selling it, so it gets bought up. Sold, bought up, sold, bought up, sold. See? Just indicators, lagging indicators. And then I can keep an eye on the NASDAQ, the S&P 500, and the Dow Jones. Right? If they continue to go up, the NASDAQ and the SPY, then it takes Amazon with it, and vice versa. Right? So those three are correlated. The NASDAQ, the SPY, and the Amazon. They're all connected with ETFs, indexes. So keep an eye on that. It will help you make a decision if you're really undecided. The more pros than cons you get, that's the way you want to put your option. And that's about it. If you liked the video, hit the thumbs up, subscribe, leave a comment below, share with a friend. I'm going to leave 4 different links, I believe. One for Acorns, one for Yotta, and then, is that it? Oh, Robinhood, and 3 more for Grand Stevens, wysetrades, and the trading channel, just to go over more chart analysis. And once you start going down that wormhole for day trading, the possibilities are endless. You could come back and teach me something or ask me some questions maybe that I'm missing would help me out. So if I can help you, you can help me, right? So I'll talk to you probably Monday morning. Peace.